The American nightmare. So what we're finding is a lot of people are looking to purchase a home and they're very upset and frustrated with either the process or the ability not to get pre-approved or not to be able to find a house in their pricing point. So now it's being considered the American nightmare, right? What we were taught young, or a lot of us were taught that home ownership was a part of the American dream. Right now, it could be very frustrating. A lot of people are potentially are frustrated because interest rates are higher, home prices are higher, and they have not come down. Now, some of the same people are frustrated because they have not had the opportunity to take advantage of low interest rates or low housing prices, right? There are people who are currently sitting on the fence who are looking for the real estate market to crash, and or they're waiting for interest rates to drop. What we're seeing is that housing prices are staying up, and the only housing prices that are dropping are simply because they were priced too high in the beginning, right? So what we need to assess as a borrower is, okay, purchasing a home is the most expensive and highest thing that you will ever purchase in your life. What you can afford and what you're eligible for are two different things, right? What does that mean? So when we are looking at a person's ability to qualify for a home, there's a max DTI. I will always refer to DTI. So listen, it is debt to income ratio. What that is how much does the buyer bring in of income that we can use to qualify him or her versus what they have going out on a monthly basis. With that being said, what goes out on a monthly basis, if that plus the new housing ratio, which is how much you can qualify for with your current debts exceed a certain amount, and let's say example an FHA loan 56.99, then you don't qualify. You have to figure out how to get within those parameters. What do I mean by get within those parameters? You may have to pay off some debt. You may have to figure out how to get someone else on the loan to help you, a spouse, a family member. I've even seen kids and parents get on the loan. Um, we also could be potentially paying down credit cards, getting some type of student loan repayment plan set up to make sure we're using a lower number, refinancing vehicles to make sure that we can see if we can get a lower payment. There's a numerous or a number of things that could happen to help lower your debt to income ratio. However, it's going to take work. Anything worth having is going to be work. It is not easy to purchase a home. I understand we may see online the realtors and buyers with balloons, confetti, cutting the cake, champagne popping. But to get to that process, there takes work and it's going to take work. And that's where it's starting to become what people are saying the American nightmare. Buyers are frustrated, they can't find a property. They are frustrated that they don't have the ability to utilize all the income that they have. There's so many different scenarios. They're communicating with others who have purchased homes, and the others are saying, well, I didn't have to go through that. So understand, I have closed a ton of deals in 19 years from the agent side as well as from the lender side. I have not seen no two deals look alike, not even with the same person. So I've had a buyer that in the last 2.5 years, I have helped him on 4 transactions. And each time the transaction was different. Same person, pretty much same income, but the scenarios and situations change based on pricing point, based on debt to income ratio. So no two things are going to be alike, even if two transactions going to be alike, even if it's the same person. So now we have people who say, I'm frustrated, I'll just rent. I worked all this time to get my credit score up. I've been able to do my best to try to save, but as I save, life happens. money that you have saved gets spent, or you qualify and you think you've done the things that you need to do to qualify before speaking to a real estate professional or preferably a lender, and then you come to find out that you've done the wrong things. I understand. It's still not too late. What you have to do is reach out to a lender and have a lender give you a game plan. What you need to do on your credit to make things look better, or on your situation in terms of debt to income ratio. If you haven't spoken to a lender, you're guessing. There's a ton of videos on YouTube. I'm on YouTube. I give out information, but I always say, hey, everybody's situation is different. Reach out and apply so you have a good understanding of what you need to do. I recently had a person call me. She spent $10,000 on fixing things and paying things off on her credit just to find out she wasn't doing the right thing. $10,000, and she was not doing the right thing to help fix or repair her credit. So now she comes to me and we have to figure out a game plan on how to get her in a position where she can be approved so that she can become a homeowner. And she says, Kevin, this is a nightmare, right? This is a nightmare. Then we have people listening to millionaires by the name millionaires who say purchasing a home is the worst thing to do. I want to preference that. For a lot of people, purchasing a home is the first opportunity to generational wealth and for you to leave a legacy for your family. I know generational wealth is thrown out there a lot, and we won't see it. It's the generations after us who will see it, but home ownership is typically going to be the start. The same person who says buying a house is a bad decision is the same person who purchased a home, found out that it had equity, they then sold the home, and then began real estate investing. Without that opportunity, most of us don't have a chance or don't have the ability to save money to get into real estate investing or to get passive income by buying rental properties. Again, purchasing a home is a part of a great opportunity for many of us. For a long time, a lot of people of color, men, women, people of color, men and women in general, did not have the ability to purchase a home. And now the opportunities are here and they're here to stay. We need home ownership. Home ownership is key and integral to growing. If you ask 50 millionaires, I bet you all of them have something to do in real estate, some portfolio to do with real estate. And when I say to do with real estate, that's whether you own single family, multifamily, if you own land, that's all a part of real estate. That's all a part of real estate. Hey guys, I'm on here today talking about the American dream of owning home ownership. Some people are considering it the American nightmare because of the market, and they're waiting on the sideline for foreclosures. They're waiting on the sideline for interest rates to drop. Some people are waiting for both to happen, and you're most likely not going to get both. You're not going to have record lows in terms of interest rates, and you're not going to have record low housing prices. Now, right now, interest rates are at the highest they've been in 22 years. Housing prices are the highest they've been ever. And to give you a synopsis, we are 4 to 5 million homes short on the market. So there's this thing called supply and demand. If there's a lot of supply, then there's no demand. If there's a lot of demand and not enough supply, then housing prices are going to go up. They're going to continue to go up. And this is not a scare tactic, but it's the way that real estate works and the way the supply and demand works. Some people say what goes up must come down, but it will probably come down if there's an oversupply. A lot of people comparing what they want to see to 2008 to now. And in 2008, there was an oversupply of homes. Interest rates started to come down. And that's where the foreclosures came in and the builder supply came in. We don't have that scenario. Builders don't have the capacity to build as fast as we need. And then sellers are not putting their house on as freely as they were before. They may have the equity, but one, do they have the ability to move somewhere else because they may pay more? And two, do they want to get rid of the 2 or 3% interest rate or even 4% interest rate that they got when they purchased a home 2-3 years ago? Again, the American dream is home ownership, and anyone who talks against it, I will go word for word with them, because home ownership is the key to wealth and having something for your family, leaving something for your kids. Hey guys, I'm Kevin Jefferson, the People's Lender. If you have any questions pertaining to home ownership, questions about a scenario you have, drop them in the chat. Do me a huge favor. If you're watching this now and you're not subscribed to the channel, hit the subscribe button and the notification bell, and it will let you know when I go live or when I post a video. If you're watching the replay, go back to the beginning, start from the beginning. If you just joined me, start from the beginning as well. We're talking about home ownership and the American nightmare. Is home ownership the American nightmare, or is it still the American dream? If you have any questions, drop them in the chat. I'm also, if I have a Facebook group, if you would like to be part of my Facebook community, the link will be below. You simply ask to join, and they will, and you'll be invited to the group, and you'll be able to join. If you are looking for some guidance on the home ownership process, I also have a link below for a home buyer's guide that will help walk you through the process from A to Z on how to purchase a home and different things that you need along the way in the process. Everything from the ability to select a realtor and a lender, and what documentation you need in order to go through the home buying process smoothly. Are sellers more likely to give closing costs now? That's a great question. In this market, sellers are more likely to give some type of concessions, closing costs, seller's assistance, depending on where you're located and what your real estate industry or what your area call it. I say yes, because right now, instead of getting 10 to 15, and let's say even 5 to 10 offers, they may see 1 or 2. So the seller is selling for a reason. So they're either selling because they have to or because they need to get somewhere else, right? So if you put in an offer and you ask, and let's say your closing costs from your lender is $12,000, and you put in an offer on a property and ask the seller for $12,000, they may not pay the entire 12 in this market. However, they may pay six or 7, right? In a market where you have multiple offers, and let's say it's 5 or 6 offers, and you ask for that same $12,000, the seller has more offers to pick from, so they're more likely to go with the offer that's going to bring them the most cash at the end. Seller's assistance comes from the seller's proceeds. So if they're selling their house for $200,000, they owe $100,000 on the house, and they're supposed to, after all said and done, let's say they're to get $70,000 after real estate commission, and you're asking for 12 and they give you 12, then they're going to, instead of them walking away with 70,000 after they gave you 12, they're going to walk away with about $58,000. So they need to make sure that that deal is right for them, because typically they need that money to go to the next property or to do what they need to do in order to purchase a home. That's a great question. Are there penalties or drawbacks for a buyer that needs to push back a closing date? That's another great question, Ms. Murph. It depends. So the seller, when you're pushing back a closing date, whether it's the buyer side or the seller and buyer both have to agree to push closing back. If you're in Georgia, there's something called an 8-day unilateral. If the seller decides not to push it back, there's typically a clause in there that says you have 8 days that you can use freely and push the closing back. Anything after that, the seller has to agree. I typically advise my clients and my realtor partners to use that 8-day unilateral as a last resort. In most cases, sometimes the seller has to put closing back and the buyer has to agree. Is there a penalty? There's only typically penalties. What I've seen, if it's with a corporation or maybe a foreclosure where they have something called per diem. Other than that, that's a negotiating point. And if it's a valid reason, you have your real estate agent convey that information to the listing agent and then see if you guys can come to an agreement. Now, if you're talking about 30 days, the seller may want a larger deposit. If you're talking about 3 days, they may say, okay, that's fine. It's still a negotiating point, and you need to make sure you have a realtor who is going to go to bat for you and has the ability to negotiate and make sure that your needs are met as well. That's a great question. Do buyers with a 620 credit score, can a buyer with a 620 credit score apply for a 203K loan? Yes, they can. You can apply for a 203 FHA 203K loan, which is a renovation loan. However, you probably are going, unless you have strong assets, you're probably going to need a stronger score. When I say strong assets, so on a 203K, you typically cannot use down payment assistance. You need to have your own 3.5% down payment. You need to have your own funds set aside for closing costs. The seller could contribute a little bit if you guys negotiate in the price, on the contract, but for the most part, 620 credit score could get you a 203K. You just need to make sure you qualify at the debt to income ratio. So you still have to qualify, but 620 credit score is a doable score. Just depends on the rest of the determining factors. Great questions. Great question. If you are new to this channel and you like what you hear, do me a huge favor and give me a thumbs up. That helps with the YouTube algorithm. If you're also new to the channel and you would like to get notified when I go live, click on the subscribe button and the notification and let you know when I go live, as well as post videos. Evidently these builders in Arizona didn't get the memo on the shortage. They're building like crazy, including luxury apartments with 4 bedrooms, attached garage, and a price of equal to a home. Wow, that's crazy. Some people take risk. They're builders are investors as well, and some people take risk. So, housing shortage has to do with apartments too. So if they're building apartments, luxury apartments, at some point their rents may go down, or they may, they say you build it, they'll come. I've seen apartments and houses in locations I never thought would be or overpriced or didn't sell. And because of the need in the market, they got gobbled up. How much of a price difference typically is it when it comes to homeowners insurance between condos and a single family home? Derek, that's a great question. So in a couple of weeks, I'm going to have an insurance agent on. They can answer that better, but I'll give you my version. I typically see maybe $100, $120 difference in the condo insurance being lower, because when you have insurance on a condo, you're only getting insurance on the content, which is inside of the condo. When you have insurance on a single family home, you're getting insurance to replace the cost of that home as well as the content. So that insurance is going to be more. not because of pricing point, but because of what has to happen. The condominium association, typically they have to have insurance on the entire building. You just need insurance on the inside of your unit. On a single family home, you have to have insurance on your entire house, because if it gets damaged by wind, hail, hurricane storms, or tornadoes, or gets fire damage, you need to have the ability to have that house rebuilt back on that land, because typically you're not going to be finished paying for it. That's a great question. Homeowners insurance and flood insurance can make home ownership a nightmare. That's true. There's a huge difference, depending on where you live at. Homeowners insurance is not flood insurance is not automatically included in homeowners insurance. That's a separate policy, and that could make or break your deal, because anything that's considered debt that's added on outside of what you already have could affect your ability to purchase that house or at that pricing point. Yes. So homeowners insurance on a townhouse is typically less expensive than a single family home, and sometimes it's a little bit more than a condo. So it's typically homeowners insurance is higher. Then you have townhouses, and then condos are a little bit at the bottom. Now, let me preface that. If you have a new construction house that's new construction, the homeowners insurance isn't going to be as expensive because it's new and it's less likely to have things happen to it. That would probably be the only time you would see homeowners insurance on a single family home be less or the same as a townhouse or a condo. Great questions. Hey guys, so if you are now just joining, do me a huge favor and give us a thumbs up, and let's get this pushed out. We're currently talking about, is home ownership the American dream or the American nightmare? I paid $5,000 deposit. Does this money go towards down payment costs? So the $5,000 deposit or earnest money or escrow will count towards your funds to close. Funds to close is a compilation of your down payment requirement and the closing cost requirement. You'll see that as funds to close. If you have your down payment covered by some sort of down payment assistance program, then that same $5,000 still get credited to you towards your closing costs. So that's a great question, because it's a huge misconception. When your lender typically gives you your numbers on what you need to pay in something called cash to close, you've already typically been giving credit for anything you've put into the deal, in terms of if it's seller's credit and they give you $5,000 and then you put $5,000 as an earnest money deposit, that has already been credited towards you. A lot of people try to subtract that number after it's been given by the lender, and then they fall short. So listen, whether it's me or another lender, if I call you and I say, hey, Mr. and Mrs. Buyer, your cash to close out of pocket is going to be $15,000. You've already been given credit for the $5,000 you put down, as well as the $5,000 that the seller's given towards closing costs. Take that as a mental note. Typically, you don't get credit for the home inspection, because that's not a part of closing costs. That's paid outside of closing. And then you typically don't get credit for the appraisal, because that's typically paid outside of closing. So when you are looking to purchase, you have 3 out-of-pocket expenses that come out of pocket before you even close on the house. Your earnest money deposit, your home inspection, which is paid by the buyer, and the appraisal, which is paid by the buyer. The appraisal is paid by the buyer. The appraisal is paid by the buyer. I repeated it 3 times because a lot of buyers say, oh, I didn't know. I thought I could pay that at closing. It gets paid up front, and it's paid by the buyer, not by the seller, not by the lender. In some cases where you see a lender who could be advertising a free appraisal, yes, that could potentially happen. Free appraisal means if you close on that loan, we'll give you a credit for that 500 or 600 bucks that you paid for the appraisal. If you don't close on the loan, they're not going to pay for that appraisal because that's a loss of income to them. And if they had 10 deals fall through at $500 a pop in 1 week, that's $5,000 that they lost, right? So the appraisal is paid by the buyer, and if it's ever a credit for the appraisal, it happens at closing and comes off your cash to close, where the lender gives you something called a lender's credit. Trying to get to Miss Wanda. I find that people may hesitate to buy a house, but some will buy a car, high interest rates and cars, even though cars appreciate. That's very true. So I've had people say, hey, well, I've only got the car financed for 6 years. The house is for 30 years. Either way, it affects you. It typically affects your ability to own a home. And it also affects how much home you can purchase. So if you're looking to purchase a home and you need a car or want a car, I advise you to wait until after you buy the home. You can always get car financing after you own a home, but typically it's going to be hard to do in reverse. And let me tell you this, if anybody asks you to co-sign for them on a car, unless it's your spouse, but if you're buying a home, do it after you purchase. I've had people come to me and they went to car dealers and the car dealers said, oh, it won't affect your ability to buy a home. And then when they come to us to purchase a home, that $500, $600, $700 car payment now affects their ability to buy a house. Appraisals and home inspections too. I'm not sure what that meant, Miss Carmen. How soon before closing should the appraisal be done? So if you go, if you get under contract, the first thing that you're going to do is schedule a home inspection with your realtor. Have you and your realtor will schedule a home inspection. You want to schedule that first to make sure the house is even in condition for you to buy, right? After I hear, hey, Kevin, the home inspection is good to go, then I order the appraisal because the appraisal has to be paid right away. If you pay for the home inspection and the appraisal, and let's say the appraiser goes out around the time the home inspection is done and you decide that you don't want the house, you've then lost, let's say the home inspection was 400 and the appraisal was 600. You've lost $1,000 that you won't get back. So you want to make sure the appraisal is done within a week of you going under contract, depending on how fast you need to close. But you want to make sure it's done in advance. Depending on the state you're in, there's going to be dates that you have to meet. So I say order the home inspection immediately. And then once the home inspection is clear, or you guys don't have any gripes about what's going on with the home inspection, then I would ask the lender to order the appraisal. What areas do you service? I have the ability to help you in, my team and I have the ability to help you in 46 states. The 4 states that we can't do is South Dakota, Massachusetts, Rhode Island, and the great state of New York. If you need a referral in one of those areas, still reach out to me. I have some counterparts who are licensed in those areas that I can refer you to. But I can help you my team and I can help you in 46 states. Yeah, you're right. Buy the house first. Buy the house first. A lot of times people buy the car. I've seen people buy cars as a way to increase their credit score because someone told them you need to increase your credit score, so buy a house. You need to increase your credit score, buy a car. So buy the car after you buy the house. Don't buy the house after you buy the car. There's other ways to increase your credit score. There's other ways to increase your credit score without having to make a major purchase like buying a house. I saw a question. So is it true you can have down payment assistance and closing cost assistance? In the perfect world, it's kind of possible. So let's say you were doing FHA loan and you had down payment assistance from a down payment assistance program that paid you 3.5% down payment. You and your realtor also asked the seller for closing cost assistance, and the seller gave you closing cost assistance. Yes, that's possible. Are there programs that could potentially cover both? In certain areas, when you layer down payment assistance programs together, which is tough, very tough, that's possible. But I always have buyers ready to have their funds, because at any point, the down payment assistance can go away. Example, when COVID first hit, some lenders stopped doing down payment assistance programs. So then the buyer was already under contract and they had to come up with their down payment and closing costs. I always prepare my clients for the worst. And then if they have money that they save because they got down payment assistance and closing cost assistance, then it's a win-win for them. On the homeowner's insurance quote that's required by the lender, is it typically the dwelling coverage to be less than the home value? I can't answer that question. I don't know. I don't know. Come back in a couple of weeks for when we have a homeowner's insurance agent on. She can answer that question. I will say that typically we want to see repair costs. If you got a new construction home and your house burned down in 2 years, you got 28 years left on a mortgage. So you definitely want to have full dwelling coverage to bring the dwelling back to where it needs to be. It says, what down payment assistance? It says, what down payment assistance I would buy a house first and work on my credits. I don't understand the question. If you could reword it, I can answer it for you. It says, how much do the slight interest rate increases hurt buying powers on average? An eighth. Interest rates they increase by 1/8 of a point, right? So depending on the pricing point, the 1/8 of a point could affect your payment $20 to $30. So see, it's not a huge jump. I've had people where I had a slightly higher interest rate, but because we do full customer service, we were able to get them what they needed for homeowners insurance lower, which made a huge difference in the two. I've seen people get high interest rates, and then they got, low interest rates, but they got low, high homeowners insurance, which that affects your payment as well. So included in your payment is principal and interest, homeowners insurance, taxes, and mortgage insurance. So those are the 5 components. A lot of people worry about the private mortgage insurance, but what people don't understand is right now, the changes they made, the private mortgage insurance or the mortgage insurance is the lowest component of your payment. So why would you put down 20% to save $75 a month? Doesn't make sense. I would rather have the 20% or the additional 15% to save than to save $75 a month, because they don't equate and they're not equal. Can I get down payment assistance and still put money down if I can't purchase for the full amount of the home? Yes, that is possible. I've had people use down payment assistance and put down additional funds so they qualify. Now, all down payment assistance programs may not allow you to do that. Some have a threshold of how much money they want the buyer to have. Typically, those are state bonds or local down payment assistance programs in that municipality that don't want you to have a certain amount of capital or assets. But yeah, you do have the ability to put additional funds down along with the down payment assistance. Great question. I would buy a house first, then work on my credit. That's a different perspective. And you could be right. So having a 700 credit score that everyone talks about isn't as easy as people say. And to be truthful with you, depending on the type of financing you're getting, it doesn't mean that you're going to qualify for as much as you want. Sometimes it doesn't have a significant change in your interest rate. It may affect what your discount points are, but it doesn't always affect your interest rates. So I've had people buy homes with lower credit scores, and you can work on your credit afterwards. I've had people try to wait until they got 700 credit scores, and then COVID hit, rates were at an ultimate low, but houses were at an ultimate high, and then they no longer qualify, even with the score, and they never got the 700 credit score because they didn't do what they needed to do. So they wasted a year and probably lost, if they had purchased the year before like they were supposed to, probably lost $50,000 to $70,000 in equity that they could have had, and wasted, let's say they were paying $2,000 a month for a house, $24,000 that they gave towards rent over the course of that year. So it wasn't worth it. The trade-off wasn't worth it of trying to get a 700 credit score. If the house is $200,000, how much is the closing cost fee? The closing cost fees are going to vary. It's going to depend on what state you're in. If that's a $200,000 house in Georgia, it's going to be different than $200,000 house in Jersey, because New Jersey taxes are higher. First, you got to find a house for $200,000 in Jersey, but they're going to be higher. I always go against people saying, "Hey, I thought there was a percentage that closing cost is." It's not, because if you get 3% closing costs in the houses in Jersey, it's not going to cover the closing costs. It may cover it in Delaware. It might cover it in some other states. It may cover it in portion of it in Georgia. So it's really no way to gauge what closing costs is going to be. You might be with a lender that has high discount points because you're buying down the rate, or if you're using a down payment assistance program and they have discount points, it may be higher. So, but just to give you a round figure, $200,000 house, you may be looking at, let's say, $10,000 to $12,000. Don't quote me on it, because your homeowner's insurance may be higher, taxes are higher, all of those things play a part in it. And you may have discount points. Can I go under contract October the 21st, right? And can I start the buying process on September the 21st, or do I have to wait to get approved? You need to wait to get approved, because if you don't get approved, you don't know how much you qualify for. And no realtor should be showing you a house without knowing what you qualify for, because it takes time from you and time from them. And then if you go under contract and you can't get the financing on, let's say, a $300,000 house, you have the ability to lose your earnest money deposit because you could not perform. So I would get pre-approved first, and then you can see what you're able to qualify for. Because also in that pre-approval, you get to have an idea what your payment is. If you go look at a $500,000 house, you say, cool, I got this $500,000 house, 5-bedroom, 3.5-bath, 3-car garage. I love it. Let's go. But then you go get approved and you talk to the lender and you find out that that payment is $5,000. And he's like, oh, whoa, I don't want to pay $5,000. Getting pre-approved is the first step. Not looking at any houses. If you look at a house, it's to get motivated, go to an open house, ride by neighborhoods, look at houses to help motivate you. But I would not go house shopping without a piece of paper in my hand. And if you're a realtor on here, I would not show a person a house without a piece of paper in your hand. Because what happens is when that clock starts on them 30 days or whatever you have in your contract, every day that you wait is a day lost. One more question. Down payment with a VA loan. It's possible. It depends on what state you're in. Now, more down payment assistance programs work with FHA than probably any other loan. I would say USDA and conventional have the least. VA is probably somewhere in the middle, but sometimes you can find a program that will work with any loan type, whether it's FHA, VA, USDA, conventional. Typically, it's going to be a state housing bond program, which typically has some limitations, but it is possible. Yes, we offer the lock and shop program. Thank you. Great question, Stacy. How long do pre-approval letters last? Pre-approval letters. So when your credit's pulled, that credit report is good for 120 days. Pre-approval letter is typically good for 30 days because in 30 days, you get a new bank statement, you get new pay stubs. So you might have had money to put down on a house and for closing costs, and then you spent it. So then you no longer qualify, right? Or your income may have declined, or you no longer work overtime that we were using, or you may have gotten more. So then we can qualify you for more. So I would say 30 days. Example for me, I'm always watching the market and I keep track of who's pre-approved, pre-approved. And if interest rates drop and we were already marginal, I'm going to reach out to them and say, hey, rates drop. Let's see if we can qualify you for more. And in reverse, if rates increase and we were marginal, I'm going to reach out to you and say, hey, interest rates increase. We need to reevaluate what you qualify for. Or we may now need to add your spouse or a family member to the loan to help you qualify for more. Great question. Oh, okay. Can I get pre-approved before my contract on October? Yeah, you can. You can get pre-approved. That's a quick turnaround. You would have to get pre-approved. If you got pre-approved on October 21st, you'd have to find a house and then close in 30 days. It's a quick turnaround. There's lenders who can close quickly, but the problem is finding a house and getting accepted in that timetable. But you can, it can happen. No problem. Do lenders take into consideration the area that you're purchasing when they decide how much you qualify for? No. Nope. That is housing discrimination, redlining, and steering. So no. What they do take in consideration is the taxes in the area. So example, if you're looking in a not so desirable school district, the school taxes are typically going to be lower than if you're in an area where the school districts are top tier. Nothing to do with the area itself, more to do with the taxes, which affects how much you qualify for. But no, I don't. I know that some lenders have come under fire for something called redlining, which happened years and years ago, but they've come under fire now for not lending to different neighborhoods. And then some of those same lenders are now trying to offer products or down payment assistance to the very areas that they were discriminating against. Hey guys, if you are just joining us, we are talking about, is home ownership the American dream or is it the American nightmare? Are you frustrated with what's going on? Do you want to give up? Is it really worth it? You know, you've heard people say, hey, owning a home is more responsibility than I want to have. I want to rent forever. Hey, nobody in my family's ever owned a home. That's my dream. I need to live somewhere that I own. I want to leave something for my family. I want to leave a legacy for my family. What is it to you? You guys are here for a reason. Obviously, you're here because you want to purchase a home. Drop below, what is your motivating factor for home ownership? I'd like to get that feedback. There's a ton of people who think they're too old to buy a house. They don't make enough money to buy a house. I can't buy a house because I'm a single man. I can't buy a house because I'm a single woman. I can't buy a house because I'm a single entity. I want to buy a house because I want to leave something for my kids. What's your motivating factor of owning a home? If you're just joining, guys, we're talking about home ownership. If this is the first time you ever heard Kevin Jefferson, the People's Lender, and you like the information that I'm giving, give me a huge thumbs up. That helps the YouTube algorithm push it out. If you guys have any questions pertaining to home ownership that you don't want to ask online because it's a little personal or you may be embarrassed, my link will be here for you to schedule a call with me and my team. I can answer any questions. We can do it via phone. If you want to see if I'm a real person, we can do it via Zoom. You can also email me and my team and say, hey, I'd like to schedule an appointment with Kevin. Can I get on this calendar? I paid for an appraisal early July. Closing is next week, and the appraisal hasn't been scheduled yet. Should I be concerned? Yes. You should be very concerned. You should be very concerned because the appraisal has to come back in. Let's say in a perfect world, it comes back at value. You still have to get that appraisal back into underwriting because the underwriter is not going to lend you more than what you qualify for. And the only way to know if the house is worth what you're under contract for is to have a full appraisal. If the appraisal comes back at contract price, let's say 350, however, it needs repairs, those repairs need to be satisfied before you go to closing. So a week is not a lot of time depending on the turn times of the company. And think, next week we only have 4 working days because Monday's a holiday. And I know a lot of lenders close their operations close early on that Friday so they can get a long weekend. The same sometimes with attorneys' offices as well. So I would be concerned. I'd reach out to my lender and ask them, hey, when is my appraisal going to be ordered? Is this going to affect my closing date? Hey guys, if you are new to the channel, also subscribe. I give out some pretty dope information. I'm not a hard selling guy. I just give you facts about the market. I also give my opinion and my thoughts about the market. I recently posted a video that Dave Ramsey said about short-term home ownership versus short-term rental versus long-term renting. It's okay that you're renting. Don't ever let anybody shame you in the fact that you're renting, but don't let renting a home be your long-term goal. You want to have some sort of home ownership. When you think about the average American, if they can purchase a home and they are able to stay in that home 5 to 10 years, they're going to accumulate something called equity, property value increasing. That equity, you have the ability to do so much with that equity. You could pull the equity out and pay for your kids' college if that's what you want to do. If you're interested in becoming a real estate investor, you can pull the equity out and use it to purchase a second home or an investment property. And then as that appreciates, it could pay off some of what your payment is and then pay off that investment property. There's so many things you can do once you build equity. And I think home ownership is the way to wealth. I mean, it's a lot of things you can do, but home ownership is the way to wealth. You get no benefits of being a renter, no financial benefits of being a realtor, other than, of being a renter, not a realtor. The benefit of a renter, you don't have to fix things. But then I get a lot of people who decide they want to move out because their landlord's not fixing anything and they're paying $2,500, $1,500 a month. I think home ownership is the way to go. You need to have an experienced team. When I say an experienced team, you need to have a dope realtor, a great lender, a great attorney, home inspector. Your team needs to work together for the common goal, which is to getting you into a house. I know there's 1.6 million realtors. They're not all created the same. There's a ton of lenders. They're not all created the same. You need to make sure that someone can help you on your journey to home ownership. And let me tell you this, if you don't walk away with anything from this live, make sure your lender is telling you what you need to know and not what you want to hear. See, a lot of people have something in their mind that they want to hear, and they want that lender to tell them that because they think that's the way it should go. I'm not doing my job if I tell you what you want to hear and it's not true. I've lost clients because I've told them you're going to need some funds. This is what's going to happen. And they decide to go with the lender who lowballed the fees, lowballed the interest rate. And then sometimes they've come back because they weren't pleased with the service. And sometimes I talked to the agent and they said that was a horrible experience, but they were so far into the deal. They were so far into the deal that they had to close with them, but they weren't satisfied. Am I perfect? Not at all. Not perfect at all, but I do my best and I try to make up for my mistakes. See what Stacy said, renting is adding to someone else's pockets. You got that right, Stacy. It's a combination. I want to leave something for my son, stop being at the whim of landlords, having the equity available for my son if I stop lying about age and elder care. And that's the other thing. You want to make sure that after you purchase a home, you want to make sure you have it properly set up so that your family can take advantage. Now, hey guys, this is a shout out to my cousin, my YouTube cousin, Wanda Langleys. Once you purchase a house, or you need to check her channel out about probates. She has amazing stories where she's been able to help people with probate. She'll explain to you about probates, meaning what it is, why you need a will. She has some dope information. I'm going to put Wanda's YouTube page at the bottom because I think that's very important information because like Ms. Jefferson said, if she dies or something happens, you want to make sure that that property goes to your family and doesn't go to the state. And that you have a will or trust in place so they know what to do with your property, as opposed to the family fighting over who gets it or selling the property. That's a great comment. I'm glad. Hey guys, again, do me a huge favor. If you have not done so already, give me a thumbs up. Let me know you like my information. If you're watching the replay and you have questions, drop it in the comments below. I do answer the questions. I go back and check the questions multiple times during the week. If you would like to talk to me about a consultation or seeing, hey, Kevin, what the heck do I need to do to start this home ownership process? My link will be below to get on my calendar to join. Get on my calendar to get that information. If you also need a guide, the link below for my guide will be at below. It's a free guide. It also subscribes you to my newsletter, so you'll get weekly emails. I don't sell the information, but you'll get a weekly email pertaining to something on home ownership. And hey, just do me a huge favor. Tell somebody about my channel. If you know somebody that's looking to purchase a home, or they're looking to figure out if they need to buy a home or they want to buy a home, I've got some amazing YouTube lives. I've got some amazing videos that can help you guys in the home ownership process. Again, I'm Kevin Jefferson, the People's Lender. If you're on here and you have a question, I've got a few more minutes. You can drop it in the chat. If it's too much, click on the link and we can get a private session and we can talk about your specific scenario. When buying from a family member and you're living in a home, is a home inspection still necessary? I would say yes. Even though you live in a home, you still don't know what's behind the walls. The home inspector is going to look at everything from the rooty to the tube. They're going to go in the attic. They're going to go in the crawl spaces if it's one. They're going to look in the basement. They're going to look at light fixtures. They're going to look at everything. They're going to make sure there's no cracks in the wall. They're going to make sure that the house is sturdy. They're going to let you know how long the life of the roof is. That's if you're living in a home. So yes, I would definitely get a home inspection. Just so you know, even if you don't want anything fixed, just for your knowledge to know, hey, I have a home inspection on this house and this is what could potentially go wrong down the road. I'm even a proponent for home inspections on new construction. Because the builders built it and it went through inspections doesn't mean it's done right. So I would get a home inspection on a new construction as well. It says, hi again, I just got a probate and had, yep, that's good. I skipped over a question. Is there a way to guesstimate how much you will be approved based on your salary before you run credit? Yes. So if you're salaried and let's say you take that income and divide it by 12, that's your monthly income. Then you need to add up all of your bills that appear on your credit report. So if you have student loan debt, I would use anywhere from 0.5% to 1% if you don't have a payment arrangement. Then I would take each monthly payment and add those up. I would divide your monthly income by your monthly debts, and that should give you a good idea of your debt to income ratio. Typically, once you have that, you can go online and plug it into a calculator, because now you got an idea what your debts and incomes are, and it can give you a guesstimate of how much you qualify for. It's hard. That is not going to be totally accurate. Using the example, if you're in Jersey or New York and the taxes are high, it's going to be different than if you're in South Dakota, North Dakota. If you're in Florida or one of the eastern states and you're in a flood zone, or western states that are in the flood zone, that doesn't include flood insurance. Zillow and those calculators that you have online don't calculate. They calculate low for homeowners insurance, and they don't have the ability to calculate the accurate taxes. But you could get a quick guesstimate. And even if you want to reach out and you and I kind of talk through it, I can give you a little guesstimate. I won't put anything on paper. I won't give you a pre-qualification. I won't give you pre-approval, but we can talk about it. Hopefully that answers your question. That's what's up, man. No debt. Stay that way. Let your house be your only debt, brother or sister. All right. Thank you, Mia B. Again, guys, this has been great questions. If you have any questions pertaining to home ownership, feel free to drop them below. If you want to schedule a consultation with myself and my team, the link will be below to set an appointment. The time slots will be open. Seeing a question. What if you have student loans that are in line or line items on your credit, but they're not due because you're still in school? How are those treated? That's a great question. We still have to count, if it's FHA, we have to count a 0.5% of that debt. If it's conventional, USDA, 1%. Because what they're saying is, hey, yes, you're still in school and they're deferred, but at some point in this process of you owning a home, you're going to have to pay student loans back. Even if they're in a forgiveness program, you still need to pay some sort of, have to factor in some sort of student loan payment. So even though you're still in school and they're not late, but they're considered they're deferred, we still have to use some sort of percentage into that debt calculation. Because if student loans get to a judgment and go to a lien, they can foreclose on the house and everybody loses in that case. All right, thanks, brother. I'm sorry. Again, guys, do me a huge favor. If you're new to the channel, and if you're not new and you've been watching me for 20 weeks in a row and you've been watching all my videos, subscribe. Hit the subscribe button. Give me a thumbs up. And guys, if we don't have any more questions, I'm going to wrap it up. I'm Kevin Jefferson, the People's Lender. Have a great night.